All right, stock started the week here on a high note, relatively positive note here, at least for some stocks. For the majority of stocks, not so bad, not so much. You'll see in today's market outlook video, the rally might not be as bullish as we think it was, considering that it was very limited to, in particular, really one stock that had a tremendous gain that kind of pulled up one sector, which seemed to pull up the rest of the broader market. So we're going to break all that down in today's video and talk about whether or not today's rally is the start of things to come for the week, or is it just a reprieve before some more weakness, especially kind of because we haven't really had the weakness that kind of have breaks the dam, so to speak, and lets it all out. And we've just been kind of putting pressure. There's been some leaks coming through, but we haven't really had the pressure yet, the actual momentum fall. And I think that that's probably forthcoming this or next week here, depending upon that options expiration, the impact it has. But I think it's coming sooner rather than later, pretty soon. So we're going to talk about why, what especially from a breadth standpoint, what the indicators are looking like here that they either reinforce today's rally or don't. And obviously, you can see I'm on the side of that of the don't. We'll take a look at the sector rotation, which is what you would expect. Kind of a risk-on move, so to speak, but very limited in scale and scope. And then we'll take a look at the different asset classes and what's really moving higher, and a few things moving higher that, from a bullish standpoint, you probably don't want to, and we'll show you those. And then our trade idea of the day, a stock that's in that technology sector that's not necessarily participating, obviously is not bearish either, and so we'll talk about how to trade that. So let's go ahead and get started. Today is Monday, August the 14th, 2023. This is the market outlook from marketscholars.com. My name is David Settle. All right, before we get started, I invite you to subscribe to our YouTube channel with this icon here or the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at marketscholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live video I do at 3:30 Eastern Time, where I review all the old Market Outlook trades to see whether we should stay in them. And I also put on today's trade you'll hear at the end of the video before the market closes. Come down to the bottom, click this heart. It opens up this tab, and hit that like button there. Same thing here. Click on this thumbs up icon. Opens up that tab, hit that like button. Again, the more you do that, it helps get our content out to all of our followers on those platforms. It's a really big deal for us with engagement, so that's why we always ask for it. So thank you to those who like us day in and day out there. Those who don't, you can do right now while you're watching with one or two really easy clicks. All right, let's start off taking a look at the S&P 500 like we always do with the market forecast tool. You can see the nice little rally we had today. Didn't quite get us back above the moving average. We're still 1/3% below the moving average. The near-term line didn't get above the intermediate line yet. Might be a day away from that. The momentum line's not. Remember, the near-term line kind of follows where the momentum line's going to go. So if we're going to really kind of take off here, we need that momentum line to jump as high as we can to give the near-term line the best chance of also getting up into that reversal zone and staying there. Right? That's the goal, to get that near-term line above the intermediate line when it's falling like this, and then get up into the reversal zone and stay there. So we're looking pretty good. The fact that we haven't at least extended to the downside means these bull tags, both of them, still have the possibility to just start a new rally, right? We have dark pink shading, which means the intermediate line is falling below the 50th percentile now. But we don't have a red line yet, so we still don't have really a bearish intermediate trend going. The intermediate line is not in bearish territory. If you look at the NASDAQ, which rallied more than 1% today, it also has, it's a little further below the moving average, but not far enough to bring it down yet, and has had dark pink shading now for 4 days. In fact, its intermediate line is in the bearish territory, and again, short-term sentiment's bouncing up slightly there. That's been the least bullish, right? The Russell 2000 today actually went down, so the Russell had been the most bullish previously, or the Dow and the Russell, Dow especially, had been the most bullish previously, and now was the least bullish today, and the NASDAQ was the opposite, right? Had been the least bullish previously, and then was the most bullish today. So the intermediate line just barely crossing out of bullish territory on the Russell for the first time. Now the Dow, remember the Dow actually turned to back to dark green shading in the green line on Friday. Its intermediate line has fallen back barely below market sentiment, and actually fallen back from not getting it. I mean, we were so close to getting in the reversal zone on Friday, and we avoided that and pulled back just slightly today. And again, we were flat on the day today, one of a weak gain. So in other words, it was a pretty low breadth day. The markets rallied to a small degree, but as you can see from the McClellan oscillator, it was a low breadth day. This in fact, we had the lowest McClellan oscillator of this downward cycle so far, getting below 40. So again, it was kind of a let's just buy the big names again, and that's kind of what helped the market stay up a little bit. The question is whether it's going to bounce up enough to basically continue this bullish trend, as we obviously haven't ended this bullish trend. We're going to be able to continue this bullish trend. The likelihood of that is minimal, but it is a likelihood that we need to be aware of over the next couple of days. More than likely, we're going to probably end up forming this week's high point here today or maybe tomorrow, and then we'll see what ends up happening, where this week's low ends up being, whether it ends up being lower as well than last week's low. Speaking of weekly charts, let's take a look at the weekly chart here, and you can see again we have a bearish candle. It's not very bearish; it's a pretty small body, so we're not really getting the dip down into 5% or less. So that's what this green line measures, the size of the body, and the purple line is a 3-day average of that. So we're not there yet. It's not, we don't have the red arrow. We haven't crossed below the 10-week moving average. I still believe that something like that is forthcoming here by the end of the week here. This week, and the Nasdaq, remember, had done that. It was flirting with it. It's got a little bit bigger of a body. Still not down to that 5% mark, which is where you typically get to in intermediate declines. And still not the red arrow, but you can see it's a lot more bearish. And then, of course, your Dow Jones, which has been the least bearish, is now still kind of struggling with these transitions. Now you got the lower close, we got some transitions. We still haven't turned bearish yet on the Dow Jones Industrial Average. Let's take a look at the 3 green arrow chart. Remember, we had some red arrows, 3 red arrows here. That's still the case for the S&P and the Nasdaq, which again is a signal that an intermediate decline is that we're in the midst of an intermediate decline. Same thing with the Russell 2000. It's now the 4th day that the Russell has been down there. Again, a green arrow seems to be pretty imminent on the S&P. That's why, when you get these bull tags, if you're going to be bearish, you need to extend away from them so you don't turn right around with a new set of 3 green arrows, or at least one. You can see the Dow still hasn't even gotten a set of 3 red arrows yet. You're still working on just 2 and still easily above the moving average. When you look at today's rally here relative to these moving averages, again, just kind of show just how bearish we've been. Today's rally basically just got us up to the 8-day moving average. So the MACD is still negative. It's rising slightly, but it's still below 0. It's well below its moving average, which is also almost below 0. And then you still have your stochastics down there with its moving average below that 20th percentile. So today's rally hasn't changed yet. You get it back above the 17, get back above like this 450 level. Now we're back to being bullish. Now we've got our bull tag bounce, but that's not the case right now. Both your positive and negative indicators are both down there around 20. Neither one of them have crossed back up above 25, which is kind of what you need if you're going to be trending in one way or the other. So we're still really not trending. The RSI and the CCI, you can see, are kind of in neutral levels. We talked about this weekly CCI, nowhere near the minus 100 mark, which is what it takes to kind of start the correction, if we do get a correction. So we're not there yet, and we have dropped below minus 100 on the daily chart. So now it's a matter of how far up we'll bounce. We've already bounced back above 50 on the RSI. Will it get back above 60 is the question. That's unlikely. Obviously, we've lost our trend, though we kept stayed above the Ichimoku cloud. We still got a positive rate of change. Looking at the Qs, we were also still above the cloud, also still a positive rate of change, and you can see the trend strength indicators are gone. We actually still are maintaining a mature trend on the Dow, back above 5, back above 80 on the noise balance indicator. So that signals a mature trend. We are kind of flirting with that green line, which signals kind of the potentially end of that mature trend, and the very strong. So we're not showing the bearish signs yet on the Dow like that we are on the others, but the others aren't showing significantly bearish signs. They're just kind of like this. We've been in the lower half of the bandwidth, but we haven't been in the lowest quartile. So it's kind of hard to really push a bearish trend when you're not pushing down against, or up for that matter, against either of these bands. And for a bearish trend, you want it to push down. We definitely have bearish momentum that's increasing, but not enough to push the bands yet outside of the Keltner channel, or again, like even much less getting below the bands in the Keltner channels, but at least getting into the lowest quartile, and that's just not, hasn't been the case yet. If you look at today's move, again, no new high, no new low either. So we'll kind of keep our eyes. We've had the bearish break there. We've had the bearish break on everything except for the Dow. The Dow is the only one still that haven't had the bearish break on its Arun indicator. You can see the low point's going to move up very rapidly up to about this level, which means this is about to drop like a rock to a very, very low level. So the Dow, unless we get a new high point in the next day or two, the Dow is going to be very top heavy, very sideways, with the low point essentially the low point is going to be right there, this low point from the 8th. And that's going to be pretty much last week's range will be the 4-week range. And we're stuck right in the middle of these inside days. I mentioned to you about last week's high and last week's low point. So there's last week's high and last week's low. We did get a higher high and a higher low today and finished above yesterday's high point. So a good bullish candle. There's no runaway gap here or anything. The runaway gap to the downside is still unfilled from over there. Now the question is, again, is this going to be the high for the week, right? We get a lower high point like we did before, and then, obviously would be a lower low point. And that's kind of what I'm expecting after kind of starting. Usually when you get a bearish week, you kind of start it off at, with some gains before working your way down to the downside. If you look at today's volume in trading, which we already talked about, the breadth was very low with the McClellan oscillator. The money flow also remains relatively weak below that 40 level, which signifies bearish level. So we're not getting a whole lot of volume or breadth today. If you look at the highs and lows chart that we look at on occasion to see what the breadth looks like from that perspective, it's the lowest level that we've had in the last little bit. Looking at the 50, how many stocks are above the 50-day moving average? Again, easily below 300, which is bullish levels. And then the 200, how many stocks above the 200-day moving average are still holding, but you notice both of them well below their moving averages. And that skew, which had been so high last week, and I noted when it was above 150, plummeting down to minus 135. So, again, that's typically a sign that things have changed from a skew standpoint, that the trend is changing, in this case from being a strong bullish intermediate trend to a bearish intermediate trend, and we'll see if that ends up playing out. But the breadth hasn't been very good, and as I showed you, the volume and the trading range haven't been very good either today. The trading range was slightly below average, but the volume was way below average, so very, very minimal volume again, setting us up for a very important week from an earnings standpoint on the retail front. But a very low volume bounce early in the first day of the week when there's not a whole lot of news. is not surprising for the type of move that typically starts at bearish week, which is what I'm expecting here by the end of the week. Let's take a look at the VIX chart. So we'll come over here to the VIX chart. Here we go, sorry. The VIX obviously down a little bit today. Typically rallies on Mondays and falls the rest of the week. So the fact that it was down today, markets are up a little bit, but you can see the VVIX not nearly down as much. So your correlation between the VVIX and the VIX continues to weaken in favor of the VVIX, right? The VVIX kind of shows you where the VIX is going to go, and the VVIX continues to suggest that the VIX has got a lot higher, got a lot more room to move up to the upside. From briefly now closing here below 15 and closing kind of right at that 85% mark relative to VXV, and for that matter also closing when you look at it with its moving averages here, closing a little bit below that 17-day, but still above the 30 and 50-day moving averages. Break back below the 50, and now we're kind of okay again, right? We're back to being bullish, however long a new bullish run may last. So, but we're still holding above those intermediate trends and just barely below that 15 level. All right, now let's take a look at what's driving a lot of this price action here. As you can see, U.S. equities really outperforming over the past few months. But let's take a look at just today alone. So let's come down to custom actually and go to August the 14th and take a look at today. You can see it was the NASDAQ. Again, that's why the breadth was so poor. The NASDAQ was a big winner today, really the main driver of the bullishness, bringing the S&P up. IWM was not bullish. International equities were not bullish. Equities, commodities were not bullish. Bonds are not bullish. The real estate is not bullish, but Qs rallied. So it's pretty much a one-trick pony here today. Again, you can see the dollar was relatively bullish. It continues its little bit of a good run that it's been having here. After this kind of fake out breakdown, we're right back up and filling in the gap between the 15 to 200 and pretty darn close to closing through that gap. As you can see, we're above the 30-week moving average. The MACD is rising, and we've got a little bit of a run going on right now on the dollar to the upside, and that's having the benefit. The yields started off today stronger, ended up finishing right around 4.18%. So that's not too bad when you take a look at like the yields here. The 3-month, which is the effective Fed funds rates, unchanged. It's not moving very much. So the Fed's not expected to raise rates. The 2-year yield is kind of the expectation of when and how they might cut rates. The 2-year yield jumped up, pretty nicely today, up to almost 5%, which means the rate cut odds are dropping, right? So the 10 years we talked about had jumped up to 4.18, was up to 4.2% throughout the day today. It looks like we're at 4.2 right now. But really the big thing isn't, the Fed's not going to raise rates here in September, and most likely won't raise rates the rest of the year either. You can see the odds of a rate hike in September are still very, very low, and the odds of a rate hike in November have ramped up a little bit. Now we're at the low 40s instead of the low 30s. But again, it's unlikely we're going to get another rate hike. Again, you still have pretty decent odds that we won't. But what matters is this one, like in March. When are we going to get a rate cut in March? And you can see the odds have really dropped down. You're looking at about a 40% chance. And you were at, just a week ago, we were at 60% chance. And before that, you were close to 70. And so the odds are really declining pretty rapidly of a rate cut by March. That's kind of when the market's been pricing in that first one to what recently had been a pretty high probability. You look at by the end of the year now, where you still have, again, 100% or 99.6% chance of a rate cut by the end of the year. Even these numbers have increased from where they were a week ago, or even just a month ago. You're looking at about a 5% chance of, a 95% chance of a full 100 basis points of cuts. Let's see, 99 for one and 99.9 for two, and or 100 for one, 99.9 for two, and 99 for three, and again, you're looking at about 95% chance for four, and now that number has gone up to almost 30%, 30% chance from what was 5. You've gone up to 30. So again, the odds of rate cuts are dropping, and that's what's bringing that's going to be the result. And as long as the 3-month doesn't move, that means the Fed's not going to do anything anytime soon. And the 2-year, remember, it's right now it's still pricing in rate cuts. It's right pricing out the path is to the downside eventually, at some point in time, and then the 3-month will tell us when that will start, because it will start to fall before the Fed starts cutting rates. But if this starts ramping up and gets back above 5% or higher, then you can see the pressure that would put on equities, and would most likely at some point in time signal the bottom for long-term bonds, right? Again, it's like we talked about before, it's kind of hard for expansionary periods to start with bonds in extreme oversold conditions. The expansionary periods start typically when bonds are overbought, and of course, we're not only just oversold, but on the long-term basis, it's one of the most oversold that this ETF has ever been since it was introduced. So it's we still, you would expect before a true bull market actually starts that you will fill in this gap, which means the bull market that we've been on since really that followed up this bond market rally over here, the bull market that started when bonds were overbought is still in place, right? It's actually still in place, and we haven't necessarily ended that yet throughout this correction. Of typically when markets correct, bonds rally. That wasn't the case in 2022, so that's still forthcoming before an actual correction ends. Taking a look at the sectors, it's not going to be a surprise to you what sectors outperformed today and which ones didn't, right? So if I were to go to today alone here, you'll see that it was an XLK day, right? And NVIDIA, probably the biggest mover out of all of them. If you look at the headliners in the S&P 500 here, the biggest market cap weighted areas. Sort this by market cap weighting. You can see Apple was up 1%, Microsoft's up 1%, and NVIDIA was up 7%. So there's your big winner on the day. Tesla was down, kind of, so XLY not as strong, and then Meta and Google were both up, which means XLC had a pretty decent day. So there's XLY lagging behind the broader market. All your safety trades really lagging behind, and then your other cyclical areas either down or flat, or again all significantly lower. So the question is whether this kind of move can last to start us on a new bullish trend, or it was just this kind of an oversold technical bounce, because as you can see, XLK had been getting clusters at the end of last week, and is still, despite the rally, still in a dark pink shading and a red line. And so you would expect that it's more than likely that this was just an oversold technical bounce, and we're still on the path where we're going to be leading more towards dark pink shading and a red line across the board, especially in these cyclical areas. All right, and that brings us to our trade idea of the day. Let's take a look at CrowdStrike, so kind of in this technology space. It's been flat, right? It hasn't been going up or down. It rallied today up 3%. So what bearishness it had, which really wasn't that strong, as you can see, we never did get the dark pink shading and a red line, as we've already turned green there. Red line still, the moving average still rising or back above it. We weren't that bullish on the last peak, and we haven't been that bearish in the last couple bottoms. So hence we're going, a pretty sideways price action here. If you look at the weekly chart for CrowdStrike, we again, we're bullish, but have now kind of ended that. But the candles are really small. They're not really one way. You're not getting a significant move in one direction or the other. You can see on the DMI, the ADX is really low with both lines below 25, barely above 20 as it is. The RSI and the CCI finishing in neutral levels, right around 50 for the RSI, and then close to 0 on the CCI. You can see the trend strength is very minimal. It's not even above 50 on the noise balance, and still not above 1 yet on the quality. And you're barely above the cloud, but you're below these two lines. You have a positive rate of change, but it's relatively small. Your Bollinger Bandwidth has come down from where it had been, but it's still, it's pretty decent, and it's dropping, and you're in the middle of the range after having been just kind of dipping your toe in the lowest quartile. So, and you can see the red dots we've had for so long. So the bands have been inside the Keltner channels for quite a while because it's not pushing one way or the other. It's just been sideways. So going into an earnings announcement before expiration day, what we decided to do was sell the low 20 deltas on either side, buy one, strike away. Notice I only did 2 contracts because we're getting a normal reward for about 2/3 of a normal risk because of that earnings. So there's more volatility associated, and that allows us to reduce the maximum exposure while still getting our normal reward for the trade. So I like that setup, and that's our trade of the day to try to take advantage of sideways action with this particular technology stock. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread there with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us on MarketScholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all next time.